If it has not been a crazy earnings period, I don't know what has. We have seen companies drop quite a bit. Companies like Nvidia have suffered a horrible earnings period. There are plenty more that are going to be coming up. Today, Apple is reporting earnings. There is going to be so many. And with the volatility going on during earnings reports, I figured it was so important to talk about the idea of buying the reversal, buying the dips, and how to swing trade multi-billion-dollar companies that take a dip. We're going to be talking about dead cat bounces. We're going to be talking about consolidation and reversals, how to read these, how to spot that on the charts, and how to profit. Let's jump into this video, guys. Alright guys, as I was saying, in today's video we're going to be talking about companies after they dip during earnings reports. One of the big companies that I want to talk about today is Nvidia. Nvidia recently just suffered quite a slide down. We can get into some of the reports and kind of what they reported during earnings. Previous guidance or projected revenue was $2.7 billion for the fourth quarter, which has now been updated to $2.2 billion to stay in line with forecasted sales. Much lower for Nvidia. Now, as always, earnings periods are always going to be quite a turbulent time because companies are reporting how they did in the previous quarter. That is going to affect the stock price. Now, obviously during earnings, you are going to find companies that are going to sell off astronomically large amounts. They're not going to be reasonable. It's going to oversell off. And during those times, you're going to be finding companies that are oversold, meaning that there's usually an opportunity to buy in after the bad news and be able to ride it up over time. I'm going to, in today's video, be talking about the stages of a reversal. We're going to be talking about the drop. We're going to be talking about the dead cat bounce. We're going to be talking about the consolidation phase, and we are also going to be talking about the reversal. And in that time, that is where we make our money. So let's get into the charts really quick. Now, as of recent, Nvidia, this is going to be the time period that we are going to be talking about. Nvidia, as of recent, has sold off quite a bit on earnings. As you can see, it had a massive slide over the past few months, consolidating right here down when the economy was at its worst, or the stock market was at its worst, right here, right around December 24th. Since then, and from its lows, it had roughly went up about 27%. I'd say probably to the highs, we're looking at about 28, almost, yeah, I'd say probably about 28%, which was quite an increase in its price. Now, at its highs, it was up here at $292. It was very high. This stock has just ran over the past year as the semiconductor industry has just went bananas. Now, if you do scroll in here though and kind of zoom in a little bit more, you're going to notice the massive red candle that it recently took on earnings. One thing that you do need to take into consideration here is semiconductors in general have been getting thrashed up to the point where we'd kind of seen the markets at its lowest, and they had ran up quite a bit. As we were saying here, we've seen a run up of roughly 27 to 28% on Nvidia here. And most semiconductors are pretty much up. If you're looking at Micron, if you're looking at any of the semiconductors, AMD, they all have run up tremendously over the past few months. And unfortunately, earnings season is probably not going to be very favorable for them. Now, what I want to talk about first off is this area right here, which we are going to call the drop. So during earnings, it's going to sell off considerably. This is going to be the 180-day chart, 4-hour chart. And as you can see here, it sold off approximately like 17% at its lowest of lows. Massive amount of selling, going from $158 roughly down here to lows of approximately $131. That is a massive slide. Now, during any sell-off period, you're going to be looking for something called the dead cat bounce. When we talk about a dead cat bounce, what we are talking about is, for example, right here, you're going to see that the stock had a massive drop. Imagine a cat dropping off a building. It's going to fall, finally hit the ground, and it's going to get a slight bounce. That is what you saw recently. This is what you saw 2 days ago. I guess this would have been on Friday. Actually, it would have been Monday. So Monday we saw this bounce, this recovery from lows. If we really zoom in here, you're going to see lows of $131, and then you're going to see a run up from here of approximately 8%. I mean, that was a massive, massive run up if you include the wicks of these candles. 8% is nice. Now, if you're able to, a nice opportunity to scalp a play, and this is not going to be a long-term investment, this is going to be more of a day trade, is whenever you see a multi-billion-dollar company sell off like this, a dead cat bounce is pretty much always going to happen, and it is a perfect time to get a quick little scalp in. Usually for somewhere right around probably 2 to 6% is something that you can expect. I would never expect to get from the bottom to the top. You're just not going to sell off. But if you're using your VWAP, your upper VWAP, as well as your lower VWAP, and just being able to ride that, I would say you probably could have bought in somewhere in here. If you're riding up to VWAP and where RSI was probably being oversold on the 1 day, 1 minute chart, you probably could have got out here. And so again, that's about a 6. This is 6.76. Again, 6%, 6.05% is roughly what you would have been able to make on this dead cat bounce. Now, one thing that you do need to remember though, anytime that a company has sold off this massively, there is a reason why Wall Street has not liked it. And it goes back to the simple fact that the analysts do not like where Nvidia had went in the previous quarter and where guidance is being slashed, meaning they don't see Nvidia being as profitable as they saw them before this previous quarter. So there's going to be a time period where Nvidia is just not going to be in favor of Wall Street. People aren't going to be buying Nvidia nearly as much. And that is why it's going to need a period of consolidation. Now, as you saw with the bounce here, you saw it come down here right along the middle VWAP line, and it has continued to sell off into the after hours and into today. You've seen it come back down here almost to the very bottom of $131. Now, I expect to see that $131 price point on Nvidia hold true, but I am not going to buy back in because of the overall trend and where I worry Nvidia could potentially go to. Looking here at the 180-day chart, you can see that Nvidia has had lows of $124. I don't want to use that. I don't want to look at that and go, okay, well, that's maybe where it's going to be at. If there were any level of support here, I would say that there was a level of support probably somewhere right in this $134 range. So I would maybe draw another level of support / resistance right here. The problem is we're consolidating right around that line. It's below that line of consolidation currently. I don't want to ride it because we could potentially see it drop back down here into the $127 price point. I mean, and we're looking at a drop of another 4 to 5%. That is beyond my risk tolerance for a swing trade and why I would not want to get into that. So what I would be looking for in Nvidia is I'd be looking for a consolidation period. I would be looking for it to be able to validate and verify that it is going to hold this low $130 price point. The next thing I'm going to want to see is that this EMA begins to trend up, and I'm going to see that this SMA is also going to start acting as support. So what I would do is Nvidia in this particular instance, if you are looking at a long-term buy or a long-term swing, I would say, yeah, this isn't a bad place to get in and continue to average down. If you're looking for a true swing trade, the risk is not worth it right now in terms of getting into Nvidia at this point, and you would want to actually hold this a little bit longer and see that it is verifying an uptrend pattern. The last and final company we're going to talk about in talking about the dead cat bounce, the reversal, consolidation, all that stuff, is none other than Tesla. Again, Tesla had a recent sell-off because it laid off about 3,000 employees. As you can see, it slid considerably. We're talking about a slide of approximately 19% here on a multi-$60 billion company. And you can see it had this slide, and this took a little bit of time, obviously. And now you're seeing this kind of reversal here. I would wait, and this didn't really have much of a bounce, unfortunately. So there wasn't really anywhere to like buy a quick little bounce before it sold off. But you're having to wait till the EMA starts to show a cup and handle. It's going to start reversing and seeing it come up before you get in. I think this $190 price point is really starting to show a good level of support. You can see where it had bottomed out previously right in this range. You can see that this acted as a level of resistance previously. It's a good level of buying based on the 180-day chart. So again, if you would have bought in right away after it had this massive slide, you wouldn't be down too much right now. You'd be down about 3%, but based on the lows here, you would have been down about 8%, which again is risking a lot in terms of what you're getting, and you're holding the bag, and that's not a smart way to trade. So just in recapping my trade with, or a potential trade that I would see in Nvidia, or whether it be Tesla, or whether it be Facebook, always consider these factors. Always consider that there's in the massive drops on earnings, you're going to see a drop. You're going to think that it's a good time to buy, and I want to remind you to maybe hold off and wait a little bit. Don't try to buy in right away. The next thing that I'm going to recommend doing is watch for that dead cat bounce. If you want to play that as a day trade, play it. It's definitely possible to make a quick buck on a day trade off of a dead cat bounce, but always keep your stop losses very tight and don't be the one holding the bag. If you can do this, you will learn and save yourself thousands of dollars. Like literally, if I would have had someone telling me this right now, I would have saved myself thousands of dollars. Don't hold the bag. Don't have a loose stop loss and be like, oh, it'll come up eventually. You're going to hold the bag sometimes for months, and that is not what good traders do. Third thing you're going to focus on is after the dead cat bounce, there's going to be a consolidation phase. It is going to kind of find its level of support. It's going to be an area where the stock is going to kind of stay. That means that there's an equal balance of buyers and sellers. People aren't really seeing that it needs to be valued at any less. And it doesn't mean that people are really confident in the stock yet to start buying back this dip. So you're going to see a consolidation phase. The final phase of any stock starting to come up is going to be finally the reversal. That's where you're going to see the stock starting to trend above the EMA line. You're going to see that SMA hopefully start to curve. I wouldn't base my buy-in on the SMA. I buy it based more on the fact that it has come above the EMA finally again. It's pulled back a little bit. It's validated that the EMA is a level of support, and then it keeps running. That is going to be your 4 stages of a reversal. I hope that helps if you're planning on getting into Tesla, if you're hoping to get into Nvidia, or if you're planning on buying any of these other companies that may suffer some losses and some pullbacks from earnings this earnings season. Thank you so much for tuning into Young Money Investments. If you have any questions, leave them down in the comment section. I'm so glad I get to be here and help you all out with free content here on YouTube. If you're interested in my course, I do have a course out that goes into detail step by step on how to trade, how to swing trade, how to invest long term. It just has like all of my tips, tricks, and everything in a detailed kind of chronological order that should help you out tremendously. Please check that out. That'll be on WeTradeHQ.com. The link should be in the bio. Thanks so much for tuning in. Talk to you later. Bye.